Hi everybody, this is Craig at Max Trading, and it's great to welcome traders into our room today, really from all around the world. Our thanks to all of you for your participation, and also to those who will be watching the video playback. We do appreciate your interest as well as your time. I see a few Max members in the room. Always nice to see you, and thanks for your support today as well. There are a few things that you need to know about Max Trading before you trust your account to it. Some of these things you can see for yourself. For example, you need to know that Max methods work productively in the live marketplace. You need to know that Max risk management will aggressively protect your account while it has opportunity to grow. You need to know that Max entries and exits are timely and profitable. These are things that you can see for yourself because we invite you to watch us trading live charts in real time. You may have watched the live trading last week, or maybe you're planning to attend the live trading at this Thursday's New York session, and others will watch the video of the live trading, but everyone will get to see Max methods producing gains in real time and protecting the account with superior risk management. And these are important things that you need to know and that you can see for yourself. But there are a few other things that you cannot see, not until you are actually training with us. Right now, you cannot see that you will be training with men of integrity, men who mean what they say and they follow through. You cannot see that you will train with men who are passionate about helping traders become successful. You cannot see that these are men of patience who will help you again and again and again until you understand some point that perhaps has been difficult for you. You cannot see that they will answer every question you may have during your training, or a month after your training, or a year or 5 years after your training. Your access to your Max instructors never ends, and all this is yours as a Max member, and what you cannot see is just as important as what you can see. Whatever your trading goals may be, we do look forward to helping you achieve them, and I believe you'll be pleased to find an authentic trading education that provides a reliable method of trading along with the flexibility to trade any time frame, any market that you prefer, forex, futures, commodities, options, anything. You will hear from us that trading is not easy, it's hard, and that learning to trade successfully requires a lot of work, and this is true, but don't let it scare you. The results are more than worth the work that you put in, and Max can be learned by anybody of average intelligence. All you need is someone to teach you and show you the methods and patiently lead you down the path towards success. We want you to be fully informed about Max and to have every opportunity to know as much as possible about Max trading. So please take advantage of us. Don't hesitate to ask questions. Anytime during the presentation today, you can just use the question window right there in your GoToWebinar panel, and we'll do our best to make sure all questions are answered. We'll have a Q&A session following the presentation today, and we'll stay just as long as you have questions for us. First up today is Eusebio, and he is planning to give us an overview of the entire Max trading methodology. Eusebio is a truly phenomenal trader and a skilled teacher. I think there is no one better suited to introduce you to Max trading than Eusebio. So thanks very much, Eusebio, for sharing part of your Saturday with us. And will you please take the microphone?
Yes, Craig, sure, and thanks for the introduction. So, welcome to everyone. I'm really glad to see how many you are present today in this presentation. So, and before I start my presentation, I would like to ask you if you see my chart or my screen correctly, and if you hear me well. So, if you would like to type a yes or a Y in the question area. Oh, I see some yeses. Okay. Constantine, Massimo, Roger, Dennis, Sami, and so on and so on. So before explaining what the max is and illustrating it with some example, allow me to explain with just a few words who I am. So through my accent, you have guessed that English is not my natural language. In fact, I am a Belgian trader, and I share my life between Belgium and France, and soon definitively in France. So I am a full-time Forex trader since 2009 and 2008, sorry, and I am a max instructor since mid-2009. I am a past software engineer as a services manager, and I have worked in that domain with IT companies and mainly for the banking industry for around 28 years. And the last 15 years I have had the privilege to work with important bank in Europe, which has given to me the opportunity to be in contact with some traders and sometimes excellent traders. So, but I have also a long experience in investing and in trading, around 32 years now. And I have tried almost all the possible markets we can trade: the stock market, the options market, the futures market, and of course the currency market with the Forex. And so what I'm going to explain today are some basics about the max trading system, and I will illustrate them with some trades, and then I will mention a few aspects of the money management we have with the max. So a small word about the history of the max. The max has been created many years ago by late Dr. Jim Pruitt, known as Tiger by his student. They call him with a lot of affection as Tiger because he had really a strong temperament, and being growled by the tiger was a tremendous experience. Tremendous experience because Jim knew that in 2008, beginning of 2009, he knew his time was counted, and so he wanted to share his experience with as many students as possible. So, and sometimes he was really very grumpy or appeared to be grumpy. But his aim was to give traders a very powerful, reliable, but also flexible trading method. And I will explain why flexible in a moment. The max is based, as you will see in a moment, or as you have had the opportunity to see if you have been present last week, a few days ago, during our open house. I have explained one or two of the basic concepts of the max, but important concepts. So the max is based on simple concepts, but which are not always easy to apply. And there are two important keys to achieve success with the max: work and commitment. Indeed, there are a lot of things to assimilate, to understand, and to apply to be successful with the max, because the max is a methodology aiming to give you a complete set of tools to make your trade efficient, profitable, and commitment. So because the max requires a lot of efforts to be understood and then to apply, if your commitment is only to make money, you will not sustain the effort. You will need to have a higher level of motivations to sustain the necessary efforts. For example, it may be to give a better life to your family, or it may be to help some charities, or it may be to get some freedom. You need a higher and motivation in your life to change your life in order to accept the big efforts required to be successful with the trading system. But there are also other skills to be developed: patience, discipline, persistence, concentration, confidence. Indeed, as I will explain in a moment, the max is based on concept and rules. And so we need to apply the rules with discipline without never deviating from these rules. With patience also. Patience means that the rules represent, in fact, set of conditions to be matched. In order to take an action, to buy or to sell, we need to wait for these conditions to be exactly matched. And so we need to be patient in the market until these conditions arise. And then persistence. Very often I observe with traders that after 2 or 3 losing trades in a row, they stop with their system and they jump into another system. But this is ignoring completely real facts in trading. And so we need to be persistent, and so to accept that sometimes we have to sustain some drawdown. and a drawdown can be controlled, by the way. Concentration too. The max requires a lot of details. Trading requires a lot of details to be analyzed, and so we need to focus on what we are doing in order not to miss some of these details. For example, when I trade, I switch on my radio, my TV, my internet browsers, and so on. I focus only on my chart. And confidence in the market, confidence in the max, and confidence in ourselves, and we get that confidence or these levels of confidence with practicing. So what is the max? The max is an abbreviation or an acronym for three concepts. The M stands for momentum. Indeed, we want to open a trade only when we have enough momentum and enough volatility too. And with the max, we explain, we teach you how to observe when we have enough momentum and volatility. The A stands for acceleration. Acceleration means that while the trend we are, or the movement we are trading is unfolding, we will, under specific conditions, add to our current position in order to grow progressively that position, to make it larger and larger, while controlling the risk associated with the position. We call that the scaling process. And so the X stands for exit. Indeed, if we open a trade, this is because later we want to close the trade, trying to bank some profits. And we will have two types of exit: minor exit or momentum exit, and a final exit. We make the difference between the two types of exit. A minor exit will be called a scale out, in opposition with a scale in for the acceleration process. And so, as I have just mentioned a few seconds ago, so the max is essentially a trend following method. At least with our flagship course, Chris will detail a little more later with the max standard, but we have other level of the max. With the max advanced, for example, we also teach how to consider counter-trend trade and also how to consider trades inside some type of consolidation area. But with the max, whatever the level you will use, you will have a very strict trade risk management and money management approach. Just to give you an example, it is possible to have a very strict control of the drawdowns, whatever the level of the drawdown you may predefine. And as Craig has mentioned a few moments ago in his introduction, the max can be traded in any time frame and in any market as long as the volume in these markets are high enough. It is important also to understand what the max is not. The max is not a scalping method. We are not interested in trying to catch just a few pips in the shortest possible time. And the max is not a news trading method. It is very tempting when we observe a chart to try catching these nice spikes the price can make when we have a news release with a surprise. But if you have made the experience in live trading under such circumstances, you will have observed that almost always you have bad price executions, and sometimes your trade is closed because exited on your stopped out in a very strange way. But when you understand how the market works, you understand why trading a news release is not always a good idea. And the max is not an elementary buy and sell system. We don't use fixed and rigid rules. Indeed, when we consider to open or to trade or to close a trade, we call an entry or an exit a setup. A setup is always a set of conditions. An entry setup, so, is an opportunity based on several types of conditions: technical aspect, risk aspect, and global context aspect. This last one, the global context, is very important. We need to understand what are the reasons why a market is moving. The technical aspect, of course, is represented by a set of tools we use, indicators, for example. These tools help us to make or to go faster in the way to pinpoint an opportunity. But in fact, they represent only perhaps 10% of the entire trading system. Risk conditions is also important because we need to allocate to the trade the appropriate risk in order not to be over leveraged in the trade, and to get the entry setups which are well defined which are the best entry setups, those which offers to us the best opportunities or the best probability to close the trade with a profit. The exit setup are also a set of conditions telling us when we have to take an action to reduce the risk the trade is facing. With the max, we never try to guess or to predict what the price will do. An exit technique is simply the recognition that a risk is appearing for the trade. And when a risk is appearing, and when this risk, and this is important, when this risk becomes too much important, we have to take an action to reduce that risk. And so we have several types of exit setups based, of course, of technical indicators for the reason I have just explained a moment ago, but also exit technique made on pure price action behaviors, or a combination between technical indicators and price action, mainly to identify what is happening in the momentum and in the volatility of the price, but also timing aspect, and a very important one which we call the movement invalidation. At some point, when the movement we want to trade makes no longer sense for the trade, we consider the trade must be closed if we are still in that trade, of course. And so what kind of results can you expect with the max? And I'm going to show some examples, and I will continue to explain some of the concepts we use through these examples. So this is an example of a trade on a pair I like especially to trade, which is the pound yen a few days ago. 2 weeks ago approximately, and the price was moving downward, and the trade I'm illustrating here are based on our two first level of the max primer and the max light. These two levels of the max are very basic level of the max with no acceleration technique. And so whenever we want to trade with these level of the max in the direction of the trend. To make it simple, we define the trend based on the position of the price based on or relatively to our home base. The home base is this blue aqua moving average, which is a long-term moving average. And the quality of the trend is defined by the other three moving averages which are on our screen. I have explained the role of these moving averages in our open house session last Thursday, so 2 or 3 days ago. And I will come back to them on our next one next week. So the price is moving below the home base, so we are looking for short trade. With the max primer, we have in that movement only one opportunity to trade, because with the max primer we define a very small subset of what the max is. Chris will explain more in details what are the differences between the 5 level of the max we have. But here for the max primer, you see the trade illustrated here, and it steps in yellow notations. So here we have an opportunity to open a short trade. Just in order to better remember how to open a trade, we call an entry setup with a name representing what is happening in the market, and we call it more specifically as a breakout remo. The name by itself is not important. It represents the conditions allowing us to recognize an opportunity for a trade. What is important to understand here is whenever we open a trade, the trade is considered being made of 2 units. Of course, during the course, we explain how to calculate the size of these 2 units. And why 2 units? Because somewhere in the price movement, either the price moves in favor of the trade or against the trade, we will have soon or later an exit setup triggering, telling us that now a risk is present for the trade. And if the risk becomes too much important, we will close one of the 2 units. We call that exit an MX, a momentum exit, leaving us with one open unit in the case the price resumes the down movement. And so this is what has happened in this case. The price resumed the down movement, and at some point during the down movement, another exit criteria triggered, forcing us to close the second unit. And so with that example of trade, it was a trade which has lasted a few bars, so we have been able to catch 18 pips with the 2 open units. It was a small trade, small movement, small trade. And based on the stop loss that we always fix based on rules we have with the max, we get a positive reward to risk ratio, a small one, but a positive one. don't be afraid to see small reward to risk ratio. On average, for the max primer and the max light, the reward to risk ratio when we have a winning trade is between half R and 1 R. R representing the risk we take on the trade. It can be, for example, 1% of the trading account or 2% of the trading account. I use the Von Tarp notation here. And we have around 75% winning rate and around 15% of losing rate. With the max light, which teaches more entry setups, for the rest of the movement, we had two other opportunities of trades. Of course, the first one, given by the max primer, but also two additional ones we call re-entries in these examples. With the same concept, we make the first entry, then a first exit, and then the final exit, and similarly for the third trade. And you see the kind of result we get or we got for these two additional trades. And when we addition the result of these trades, the number of pips is not important by itself, because at the end of the day, if you have made several trades, some of them may be winning trades, some of them may be losing trades. It's not the number of pips you make, but the profit, the financial profit you make. And in this case, the cumulative result of these trades was 1.15 R. So, for example, if you use a 2% risk per trade, this would have represented a 2.3% profit. And so, with the max primer and max light, we only trade in the direction of the trade with a very basic principle: opening an initial trade, making a first exit, and then the final exit. Now, the same movement analyzed and traded with the max standard, which is our flagship course, we have now only one movement from the entry. It is the same entry, of course, and one exit. And along the trade, we will have, as you can see in yellow, the notation, several scale-ins and several scale-out. Each scale-in is indicated by an SC, and when we make an SC, we add two additional units to our open trade. And when we make a scale-out or an MX, we always close one unit. And so progressively, we will increase the trade size. So we make the first initial entry, a scale-in here, an MX here, a scale-in here, then an MX, a scale-in, an MX, another MX, a scale-in, and so on until the final exit here. You can be surprised that the final exit is very close to the bottom of the day, but there are reasons why the MX has been made here, and if you take the course, you will understand why the final exit has been made here. And so you can see one trade with several scale-in, several scale-out. So totaling a number of pips of 300 pips and a reward to risk ratio of 3.75 R. With a risk of 2%, for example, this represents a 7.5% profit. With the max advanced, we consider several types of improvement in the trading process. In this example, there was only one potential improvement we could have used, and this improvement is illustrated here in white notations, which represent an additional scaling. There are other improvements we can implement when the market conditions allow these concepts. It was not the case here, so only one additional scaling, but that additional scaling means a minor action along the trend, but the result is impacted very importantly here. Instead of making 300 pips, we make 460 pips with the same stop loss, and so the reward to risk ratio is 5.75 R's instead of 3.75 R. So a nice increase in the result. And you can compare these reward to risk ratio with those of the max primer and the max light. And so these type of reward to risk ratio are on average approximately the average reward to risk ratio we obtain with the max standard and the max advanced. Sometimes less, sometimes more. It depends of the movement the market gives us. And we may have such nice movement on average 2 or 3 days per week per pair. Sometimes less, sometimes more. It depends, of course, of the global market conditions. We have a last level of the max, and I will just mention it very quickly, which we call the max ETF. And I will present here just very quickly simplified version of the max ETF. Here in the small dotted rectangle in yellow, I represent the movement I have illustrated with the max standard and the max ETF in the previous slide. So here, you see the trade has started here, and it is represented by that small rectangle. With the max ETF, we would have been able to catch the trend, that downtrend, way earlier, here, exactly on this place, and with a smaller stop loss. And we use the same type of approach. Whenever the market allows to do that, we add progressively to the trade. We make some scale out when necessary in order to control the risk we have on the trade. And at the end of the trade, exactly at the same moment, and by the way, with the max advance and the max ETF, it would have been possible for the one last hour of the day to catch a long movement of around 25 to 30 pips. But this is not the point here. So you can see here with the max ETF, because we have been able to catch the trend way earlier, and so to implement some additional actions, the difference in the result is very, very different. And so the result is really an exceptional result. We don't get such a trade every day, of course, but we are able to catch such kind of trade several times per month. And sometimes just one such trade makes your month, in fact, in terms of results. Consider if you have a 2% risk, even a 1% risk for the trade, it represents an almost 30% increase of your account. But as I have said, we don't catch such a movement every day, of course. Another example with a long trade, similarly, so it was on the Swiss yen in last January, so 2 months earlier. And so same principle. Here we have something else. You see that red vertical line. It represents a news release. It was a news release on the US dollar, I think. Perhaps, no, so sorry, on the Swiss. On the Swiss. It is a Swiss pair, so any news on the Swiss is important. But that news has not produced a big surprise, no surprise at all. So it was not a problem to start a trade immediately after the news release. And so indeed, after the news release, an entry setup appeared, allowing us to open a trade. And exactly as I have shown in the previous slide, we handle the trade making a scale out and then the final exit. And so with the max primer, only one trade was possible. With the max light, one additional trade was possible in that movement, and we have missed the last movement here. So you can see the kind of results which are exactly online with what I have explained. Now the same movement with the max standard and the max advanced is only one trade, one unique trade with several scale-ins and scale-out. In yellow, you see the decision with the max standard. In white, the decision with the max advanced. You can see the difference here. We had with the max advanced an additional scale-in. That additional scaling, which was the only difference between the standard and the advanced, make a big difference into the result. And you can again compare these results with the result of the max primer and the max light, and you can see the type of indicator we are using. For example, here I'm showing an oscillator which is the stochastic of the RSI as one of the tools we use to help us go faster in the recognition of some specific situation in the market. But the indicators are not the only type of tools we are using. The two examples I have shown are in the 5-minute time frame, but of course we can trade higher time frame, for example the 4-hour time frame. We can use also other instruments. I'm showing the silver contract here. If you ignore the instrument and focus only on the movement, you can recognize that the structure of the movement is very similar to any other instrument, and so it will not be a surprise to see exactly the same type of trades. For example, with the max standard here, an entry here, then a series of MX and scale-ins until the end of the trade, where we close the trade. Here I show the number of units. So we open initially the trade with 2 units, we close 1 unit, we add 2 units, we close 1 unit, we add 2 units, and so on. At the end, when we close the final trade, or when we finally close the trade, we were left with 5 open units. We close at that moment, of course. And so you can see the kind of result which would have been possible with that example of trade. I will not mention here. Oh, yeah, I can go very quickly with the max standard or the max add-on in the ETF, but on the daily time frame. And so I will not go into the detail, but you can see we have exactly the same structure of movement and the same structure of trades. The instrument and the time frame does not matter. Of course, I have said that we have around 75% winning trade, we have around 15% of losing trade, we have around 10% of break-even trade. The main feature of the max concerning the losing trade is when we catch a losing trade, so this happens, the loss is always a small loss. For example, here a typical example of a losing trade is this one. We have, for example, here an opportunity to open a long trade because we were above the home base. And immediately after, we have all made that experience, immediately after the price turns against the trade. At some point in the movement, an exit setup triggered, forcing us to recognize now that the risk for the trade was too important and forcing us to close one unit. And so we closed one unit here with a loss. And later on, the price continued to go against the trade, and a second exit setup triggered exactly on that place, forcing us to close the second unit. You can see that the price has turned over, has resumed the up movement before the price has had a chance to reach our stop loss. And the stop loss is called an ESL, an emergency stop loss. We do not want the price to reach the emergency stop loss. The emergency stop loss is there to protect our account in the case we have a problem, a technical or technological problem. And so if we become blind with our trade and the price goes against the trade will be closed on the stop loss. Of course, while we can handle the trade, the stop loss will be adjusted along the movement in order to progressively reduce the risk we have on the position. But anyway, when we have such a losing trade, you can see here the cumulative loss with the 2 units was here minus 41 pips, which seems important, but compare with a stop loss of 47 pips. And so this represents a reward to risk ratio, a negative one of minus 0.44 to 1 or minus 0.44 R. And typically, on average, a losing trade will produce a loss of around minus 0.5 R. Sometimes less, very often less, in fact, sometimes a little more, but rarely 1 R. Because we can very quickly adjust our stop loss as soon as the price moves somewhat in our favor. It is not a trading stop. We adjust the stop loss based on specific rules. I have said that the max is a very flexible trading system. Indeed, in order to trade appropriately with the max, we need to make our entries based on the market conditions. We recognize several types of market conditions. We call price mode, a trend mode, a counter trend mode, a consolidation zone mode, a choppy mode, and a spaghetti zone. I will not go into the details of this price mode, but each mode forces us to pay more attention to how we make our entries, and so we have specific rules for that, and how to handle a trade. In a choppy market, which can be recognized by the fact that the price is moving in a very erratic way, plus some other tips we explain in great detail in our courses, fortunately, the entry setups, the trade opportunity will be rare. But in this example, so we had no valid setup during the entire day. But sometimes we will get a valid entry setup. And when we have a valid entry setup in a choppy mode, in a choppy market, we have to handle the trade very, very carefully in order to optimize the profits or the probability to bank a profit from that trade. This is what has exactly happened last Thursday. On one pair I have illustrated, we were in a choppy mode, and a valid entry setup appeared. If I remember correctly, it was a short trade. The price has moved similarly to what it was moving previously in that choppy mode, and then reversed very quickly, and I have been able to show how it would have been possible to catch a profit from that trade. Well, with the max, of course, we have also a very strict money management approach. And when we have favorable conditions, we can compound our result in order to progressively grow our account. And when we are facing a drawdown with unfavorable market conditions, we have to also handle our account very, very carefully. But when we can compound our result, we can grow our account in a very nice way. I will not go into too many details here, just to give you an idea. For example, if we start with a $10,000 account, for example, and we take a risk of 2% per trade, and let's consider an average stop loss of 30 pips. In the 5-minute time frame, our stop loss will be on average between 25 and 50 pips, very often around 30 pips. And so let's consider that example here, and let's consider we are able to catch 60 pips along one or several trades. Remember, for each trade we use 2 units, and so in order to have the average result of each trade, we have to divide that number by 2. So this gives 30 pips, and when we divide by the stop loss, we get a 1R reward to risk ratio. If we are able to catch 1R result per day, this means a 2% profit per day with 1 or several trades. We will need only 2 months, 36 days. If we trade every day, of course, we will need only 2 months to double our account. Now, don't get me wrong, this is just an order of magnitude. First of all, it's not necessarily easy to trade every day. It's not necessarily obvious we will be able to make a 1R profit on average per day. Some days we will make more profit, some days less profit, some days we will make a loss. And so it can take some more times to double our trading account if the objective is to double it. But this gives an order of idea of what can be achieved. And with that spreadsheet you can make any experiment. So I think you will get that spreadsheet if you want it, and make so some build some scenario. And we can be even more ambitious in the way to increase the profit. You will be able to see that in the spreadsheet. So the max is organized, in fact, into 5 levels, as I have just mentioned it a few minutes ago. The Max Primer course, which is our very basic course, which allows you to have a quick idea what the max may be and who we are, if we are serious people. Then the flagship course is the Max Standard course, explaining mainly the scaling process. And between these two levels of the course, we have the Max Light course, which is free for everyone who have taken the Max Standard course. Chris will explain it a little more in details. And then we have the Max Advanced course, which integrates our advanced concept, like how can we exploit in a more deeper way the news release, how can we be more sophisticated with our money management, how can we have a more global view of the market, considering some types of market or currency correlations. I don't like to use the term correlation, but I should use the currency strengths in order to have a quick view where the big boys are operating, on which currency they are focusing, and so on and so on. And a very important concept I call the discretionary situations, how we can handle such discretionary situations. And the last level of the max, which go way more in details into a more generalized definition of the directional movement and the details in the price action, and so how we can create many more opportunities in the market. So and so with the max, in fact, whatever the level you will apply, you will have a very strong methodology based on sound concept. Sound concept because during the course we explain why these concepts are working based on the big boys behavior. And important aspect of the training we provide is, of course, we use indicators, several of them, but we don't trade the indicators. They are just tools to help us go faster in our analysis. So the last decision is always based on the price action. And we have a very solid, sound trading method with a sound trade risk management and money management. And I insist on the money management and the trade risk management because the first focus we have with the max is always the trade risk management. This is the first priority of any trader. If you focus on the trade risk management, the profits, the result will follow. And so we try to build confidence in our max student through our approach in coaching, in mentorship, through the homework we assign after each training session, with the practice we have in some of our follow-up support like the workshop, like the forum, and like the scrolling parties. Chris will give you a few more details in a moment. So this is what the max is. I hope you have enjoyed this presentation of the max, some of the important concepts of the max and some examples of typical trade you can make with the max. Now, so I thank you for your participation and attention, and now I give the mic to Chris for the rest of the presentation. Chris?
Okay, thank you, Eusebio. And is my voice coming through okay? If you could write a yes.
Yes, Chris.
Yep. Thank you. And the other thing is, if you have any questions about what Eusebio has been speaking about, please put them into the, please ask them. There's a lot of, what do you call it, max students here as well. So if something's come up, please feel free to ask. And for those max students, we also have the normal max chat room running at the same time. Anyway, hello, I'm Chris. I'm based in New Zealand. It's early morning here, coming into autumn, I think, nearly winter down here in New Zealand. I'm partner with Craig and Eusebio, and this is our 53rd series of Max courses basically since Jim passed. So from about 2007 is when he started, and we kind of took over in 2009, 2010. We've had about 1,800 people take the Max courses, mostly standard, going through this. Just to give you an idea, we've been around a while, nearly 10 years now, and kind of know a bit about what we're doing. So, yep, we're quite solid. You say that?
I'm sorry to make a small interruption here, but it's the second time I have had a micro disconnection of my electricity here. Fortunately, I am with my power supply, so I hope you have seen nothing on the screen, but I may disappear at any moment, so be ready to take over with your own PowerPoint, please.
Okay, thank you. That's cool. No, there was no interruption, so that's great. Thanks, Eusebio. Okay, so if you're still there, next slide, please. Thanks. Try another one. Yep.
Just a moment, Chris.
Sure. Technical hassles. I'll put on some interesting music in the meantime while we're waiting for this.
I'm sorry, I have to reopen it, so just give me a moment.
It's okay, Eusebio. The next slide talks about the homework. One of the really important things with the Max, which other courses don't do, is that we will ask you to do homework. So as each course is finished, what you do is you do up a couple of charts showing where the entries were and where your exits were, and we will go through the chart and make sure that you've actually done it correctly and that you've understood what's happened. We do it kind of bar by bar as well. I need to get up to page 23, Eusebio. That helps. Yep, that's the one. Okay, that'll be fine. And the homework assignment is after every session as well. We just ask for a couple of charts. You mark them up in MT4. There's no sort of writing out or anything like that much to do, apart from what you put on the charts themselves. And that way we can verify that you've understood what we've been talking about. And it makes you an active participant. So rather than just reading a PDF or watching a video and saying, yeah, I can do that, it actually makes you sit down there in front of the chart and get your hands dirty. So it crystallizes the training. It makes it real. It stops becoming a mental exercise. And what happens is when you send your homework into the group and the instructor grades it, everybody else gets to see what you've done, and you get to see what everybody else has done. So it's like being in a classroom situation where you get lots and lots of feedback around the place. And this is really beneficial. What happens is somebody will send in a chart with one particular example on it, and that may not have been covered in the session, but the instructor can fill out more details about what happened with that particular example and add extra points to the session, add extra points, extra learning that was not perhaps covered in the session, or just to get you ready for what's coming up later on. So there's you're kind of immersed in this information that's coming through. So everybody benefits from being able to see everybody else's homework. What's on the chart here is an example of what the homework looks like. We have our own particular way of marking the charts, and this sets you up for the future as well, for journaling purposes. Once you learn our method, then you kind of, and you don't change things, you're set for life essentially. It means that in 2 years' time you can come back to your existing charts, today's charts, and see what you were thinking at the time that you pulled the trigger, so that you know why you were able to do it, why something went wrong, all sorts of things like that. And on the right-hand side of that is an example of an instructor's reply. So almost, well, in most cases when I'm doing the homework, I'm going through this pretty much bar by bar. Each bar is numbered, and we discuss if something's gone wrong, what's happened with that particular bar. So those two examples there don't refer to that particular chart. They're just there as examples. But things like entry is perfect, but your second entry is not correct. You need to wait for support level and wait for the breakout. Stop losses are good. That sort of information goes on the homework replies. And if you don't quite get it, then in the classes, the charts can be brought up and analyzed even further. Next page, please, Eusebio. Okay, so as Eusebio said, and I've got a lot of explaining to do because he kept saying I was going to explain stuff. Today we've got 2 courses on offer, the primer and the standard. The standard is our flagship course. This is the one that's got the scale-ins and the money management and everything built into it, and it's the basis for the rest of the courses there. The primer is a subset of the standard. It only runs for a couple of weeks. It has a couple of entries and about 4 different exit types. So it's profitable, but you'll be, because there aren't that many entries, you could be waiting around for quite some time before the entries actually show up. There's no profit acceleration, and the money management, while good and safe, is reasonably simple. You do get homework with it, and afterwards, once the course is finished, you're invited to the Max Primer Forum and any practice sessions that occur afterwards. We call those scrolling parties. I'll explain a bit more about them in a moment. On the standard course, it runs for 7 weeks. Actually, these we've changed these a bit. We've broken the last session up because it was so long into two sessions now. So they're actually 3 weeks and 8 weeks pretty much. The final session is a session where Eusebio walks through 3 different trading scenarios for a couple of hours, a losing trade, a winning trade, and a trade in a choppy zone, just so that you can see how the max actually works. Okay, so an extra week there. The number of entries for the standard is there's over 7 different entry types. So there's plenty of entries that are available. And we've got a ton of exits. And this is to make sure that if price is looking like it's going to turn back against you, we have plenty of warning signs to get out. We don't necessarily act on every exit that fires off. That would be overkill, and you'd be out of your trade before you get too far. But if you miss one, there'll be another one firing up. So you'll have plenty of opportunity to actually make profit on your things. And if you remember back at those charts that Eusebio was showing, there were the illustrations that he was showing were the profit was being taken almost at the extreme of those movements. So while we didn't get in at the very beginning, we're getting out almost right at the end. And this is because of all the different exits that we've got. The standard includes the profit acceleration. This is the scale-in. And counterintuitively, the more times that you add to the order using the max method and the max money management, the safer the trade actually becomes. And within a few bars, you can be in a risk-free trade with guaranteed profit if the trend is moving nicely in your favor. I must admit, the past few weeks, it's because of Brexit and the situation in the US and generally worldwide, the markets have been quite flat, so not that much movement unless you've been able to catch it. So in the main trading times, London session, most of the US sessions, the markets have been kind of flat, so there's not been that much in the way of trading. But some of the more exotic pairs like the pound Aussie, the pound Kiwi, etc., have been doing some nice movements that have been quite profitable to some people. So when we say that we can increase profit 30 to 300%, there's no BS about that. If you've got a movement of, say, something like 50 pips on a regular chart, which you would normally make with your perhaps existing trend making system, by tacking on our scaling methods, you can boost that by another 30% to maybe even 3 times that or even more, depending on what the trend itself is like. And it's, like I said, it's done very, very safely. Our main, our prime driver with the max is that you do not impact your account. So we're always hammering that we avoid risk as much as possible, and the profits we just let profits come. So we're focusing not necessarily on the profit side of things, but more on protecting your money. You've worked hard to get it, and if you do things correctly, then the profits will just come. Okay. It's got the money management built in. There's plenty of homework, and afterwards there's a lot of practice sessions in the scrolling parties, as well as the Max Forum. In the practice sessions, they're held, I try and hold them every week. This week, sorry Maxes, we miss out because we're doing this promo, but pretty much every week we run a practice session, and in those what happens is you can send in your charts or your questions, and generally Eusebio will go through the charts bar by bar and answer the questions or the setups and explain what's going on, what went wrong, what could be done better. And the practice sessions are also areas where new ideas are tried out and new pieces of information that we sort of come across that go into the Max training courses get tested and sort of shown off for the first time. So they're kind of the leading edge pieces of the Max as well. Okay, the other courses, the Light, Advanced, SAM, etc., are available as well, but the Light course, as Eusebio was saying, is run only a couple of times a year. It's available by video if somebody goes for the Primer, Light and Standard package, which is kind of like 4 months worth of work. It has it's got 4 different entries in it, and more exits, about 9 exits. The increase in profit over the Primer was around about maybe 20%, maybe another 50%, just because it's got those extra exits, extra entries in it, but it doesn't have the profit management. Doesn't have the profit increase, the scale-in effect. Okay, so it's quite simple, but you get a lot more exposure to the Max, and you get more some more details on how the Max actually operates. As always, there's homework and there's forum and practice sessions. So when you see the pricing at the end of this, Craig has put together pricing for the Primer, pricing for the Standard, and pricing for a bundle of Primer, Light and Standard together. But at the moment, the Light would be just done by video. Once you've done the Standard course, then you can go on to the Advanced and the SAM ETF sessions. These are run by Eusebio himself and have a lot more entries and a lot more capability. The Advanced is really interesting because it focuses mostly on the fundamentals, and the SAM ETF is something that Eusebio has developed to catch counter trends and small movements within movements. So there's way more entries with the SAM and ETF. So if you're taking the course, I recommend that you do the standard and then move on to the SAM. The standard is necessary because it's got all the exits that the SAM uses, so it's a prerequisite. But with the SAM, it's almost like scalping with the amount of mental effort involved. It's really fast, much faster than the standard, and the results on it can be quite phenomenal. Okay, I won't carry on with that, but if you're not able to take the courses, you can do them all by video. So if you sign up for, say, the standard this coming course, and your timing, because you're in a different part of the world or you're at work or something like that, then at the end of each session, the videos will be sent out and you'll be able to take the course by video. And we recommend that people that sit and watch the courses redo the video as well, because there's a lot of information in them that is missed the first time going through. So we recommend repeat viewing of the courses, and you can speed the videos up. There's no need to sort of go through them at the regular rate. And everything is, being an instructor, I don't see much difference between people who are on the course or watch by video. The course does give you a bit more immediacy, but the video is pretty much just as good for the learning side of things. And you've got it for the rest of your life. And as well, there's homework, and you'll still be invited to the forum and the practice sessions. Okay, next page, please, Eusebio. Thanks. So as I've been going on, the courses are very detailed and precise. What we do is we teach you to find the setup, whether it's an entry or an exit, and then the execution is within 1 to 4 pips. I've been on and still see them. People say, oh, look at these 3 RSIs, how they line up, and then you do your entry. They don't sort of say when not to do the entry, because there's a major news announcement coming up or something like that. They don't give you any idea on what bar to set up, what it should look like, what are counter indications or anything like that. We try and be as precise as possible with that sort of information. And like I said, the execution is within, sometimes within half a pip of the setup bar. So once the setup bar closes, you're ready to pull the trigger within half a pip if price goes in your favor on the next bar. So really precise. We use the MetaTrader platform because it's so ubiquitous. There's no fees, it's free data feed. It's reasonably easy to set up, and we supply all the templates and the indicators, so you don't need to mess around with too much in the background. Just know how to use a folder in Windows, essentially. Once you've done the course, you can keep using the MetaTrader platform if you want, or we also have indicators donated by other members for NinjaTrader, Multicharts, TradeStation, and there's a couple of others that are being worked on at the moment as well. And if you've got, if you want to build your own indicators, we're quite happy to supply you with ours. Our indicators aren't all that proprietary. We've got a couple of that are kind of tweaked for us, but most of them are just standard, plain old indicators straight out of MetaTrader. We supply everything: the videos, the PDFs, notes, examples, demos, the chat transcript at the end of the session, and yeah, so you don't need to worry about anything. Everything is available. Next slide, please, Eusebio. And of course, like I said, you've got homework to do. The way we do that is we have a thing called a homework group. It's a Google group, and that's where you send all your homework, and that's where everybody else gets it. The homework will be delivered to your inbox, so you don't need to go to a particular page or anything. It just comes via email, and when you've done your homework, you just send it back to us by email. So once you've logged on, there's nothing else to do on that side of things, so it becomes quite easy. But the homework is really important. A lot of other courses will teach you stuff but not check that you actually understand, and I find a lot of time myself, and I see it with students. They think that they understand something. I think it's called the Donning-Kruger. There's a fancy name for something when somebody doesn't know what they don't know that they don't know. And this happens a lot. For instance, I remember Jim talking to us about one particular indicator, and I thought I understood what he was talking about, and I was looking at horizontal lines on the chart. And in fact, he was actually talking about some vertical lines on the chart. So I had things completely messed up. I thought I was right. I thought I was doing things right. But it wasn't until a third person came in, a different set of eyeballs, was able to see what I was doing and sort of correct what I was up to. So it's really helpful having somebody else sort of look over your shoulder like that. After course, once the course is finished, and they don't really finish if you don't have time to get through all the homework while you're doing it, once the course is finished, we still keep on marking the homework. There's no problems with that. In the Max forums, if you're when you carry on trading and you hit a bad patch or something like that and you're wondering, why did this fail? I thought I had everything set up. You can put it into the forum on the homework group, and we'll go through and say, you forgot about the news coming up, or you tried to enter after a long bar or something like that. We'll explain what was going on. As I've said, we've got these practice sessions on most weekends. I alternate them between primer, standard, and the higher courses, and try and hit everybody every month. Yep, okay, so there'll be plenty of opportunities. When you're in the standard course, you get 2 or 3 sessions a month, most times. We also have a thing called the news watch list. I'm not too sure, but on our website, maybe we can show this in the question and answer at the end of it. Okay, Eusebio, let's do it now. You're most welcome to log into this thing or to watch it. This is something that we put on every week. Eusebio and I go through the news and through the top pairs to trade. So here we've got a list of pairs that you should be, the times that should be avoided for particular pairs, because there's news coming up on them that can affect a trend trader. If you're scalping or something like that, then you'd have a different list. But for trend trading, we don't want to be in a trend or don't want to enter prior to something like, for instance, if you're trading the Kiwi on Thursday, you don't want to get into it when the trade balance comes out, because a lot of volatility will knock you out of your trade. And if I'd known about something like this when I first started trading, I would have saved myself a huge amount of money, because I was jumping into things wondering what the news was, why I should look at them, when were they going to come up. There are so many on the Forex Factory sites. No help with what they were doing. And so Eusebio's put together this list every week. If you want, you can get it emailed to you. There's no problems with that. There's no cost for this, and it's on our website. So whenever we sit down to trade, we mark our chart with the particular news that's coming up and make sure that we're not in a trade at that time. And if we are in a trade, we get out before it comes out, because the volatility could knock us out. We might lose some profit, but at least we won't make a loss, kind of thing. And if we're not in a trade, then we can use those news items to sort of hang around and wait for the news to come out to see if there's a trade pattern sets up afterwards. And at the bottom of it, Eusebio had there, if you can scroll down, we have a list of the top 14 pairs out of the 28 majors. Recommend that you trade at the moment the top within the top sort of 7 range. The range of daily range, if you look there, is $1,000 down to $700. The ranges are very, very small these days compared to the previous months. Last year around this time, we were looking at $2,000 to $3,000 of an average daily range. The movements these days are very, very small. So it's making trading a lot harder. So you need a really precise, detailed training method to actually get into a trade safely and get out of it safely. Thanks, Eusebio. So you can get this list and all that news sent to you each week if you want to just subscribe on that page, or you can just come to the page and check it out each day. I'll just wait for Eusebio to come back. Thanks, Eusebio. Okay, so that's the news watch list. What we're trying to aim for here is that you have a really solid trading method and you get as much support as you ask for. We're here, we want to help you. Trading is not easy. People say it's really simple. Just like playing the piano is simple. You're just putting your fingers on the keys, and that's simple. But it's not easy. Playing the piano can be quite difficult. or anything like that. So it looks easy, but there's a lot of detail in the background, and it's the detail that will help make you super profitable or kill you if you don't pay attention to it. And from what I've seen around the place, the max, just the standard, is one of the most powerful methods that are available for its ability to milk trends when they kick in, for its ability to keep you right out of dangerous situations as fast as possible. So there is a lot of work involved. You've got to be prepared to work for this thing. But once you've got it, then it can be very, very profitable. Okay, and it will help you achieve whatever goals that you've got in mind. Next page, please, Eusebio. So, the course prices. The max standard, with all its acceleration and money management and account protection and scale-ins, etc., runs for 7 weeks, or pretty much 8 weeks. The normal price is just under $3,000. We've got a webinar special going for $2,400. And if you want to take the package deal that I mentioned of the primer, the light, and the standard, which would be 2 weeks for primer, 2 weeks for 3 weeks for light, and then 7 weeks for standard, pretty much 4 months worth of solid training. This is almost like a university course. That price is $2,679. So the link at the bottom there, which Craig will be putting up in the room shortly, will take you to that page so that you can pick whether you want to do just the standard or the whole complete package itself. I really recommend you go straight into the standard. It has everything that the other two have, but if you're just starting out, then maybe start out slow. And the next page, please, Eusebio. And we put together the primer, or Eusebio did, just to give people a taste of what the max is like. I think he went a bit overboard, and it's almost, well, it is a full-blown course. It's profitable, but there's a huge amount of detail in it, and it's the main difference between the primer and the standard, I've found, is the level of immersion you get. You can take the primer and you'll learn a couple of basic entries, and that's fine, and you'll get to see that we are legit, etc., which is what the primer is all about. But you don't get the immersion and the constant sort of cajoling about you've got your, you didn't pay attention to where the trend started, you're not paying attention to where your consolidation zone lines are, that you do get with the standard, because with the standard you get to do the homeworks over and over again, different scenarios, different information, and I get to check that you've actually understood things in much more detail and much more depth than the primer. So the primer is fine, but it's harder work because it's pretty much all on you to do the work there. The standard is a lot of work, but you've got other people there to help you as well. So anyway, the primer runs for 2 days on April the 11th and the 18th, with an extra session that's thrown in, the bonus session with Eusebio. Eusebio.
Just a small detail here. It's not on the Mondays, but on the Tuesdays. We have forgotten to correct that small typo. So on Tuesdays.
Okay, no problem. So Tuesdays, April the 11th and the 18th. And yeah, and the price is $159, down from $300. So for those of you wondering about us, it'll give you a taste, but it won't give you the full power that the max standard has got. It's a way to dip your toe, but I really do. If you're serious about trading, then you really do need to take the standard. There have been a couple of questions come through so far. One is from Bryson, and he's asked, is the light course like a beefier primer course? And yes, essentially. It's got a couple more entries and a couple more exits, but it doesn't have all the power that the standard course does. And another question is, the standard course, is it required before the light is applicable? No, you can take it after the primer. You can take the standard course straight away. You don't need to do primer or light. They're subsets of the standard course. So, okay. There was a question about where can you get a list of the watch list. It's on our webpage under the news watch list page button. So just go to our webpage, and the link has already been put in the question area anyway, but I'm not too sure that people watching this by video will be able to see it. So it's just our homepage, and then there's a button at the top that says News Watch List. Okay, and okay, Eusebio, do you want to bring up anything? I'm just going through the rest of the questions.
No, nothing else to add except if there are questions in the room, Chris.
Okay, one that's come up is, are there extra costs involved with the courses? And can we do monthly payments, and how much time do I have to spend to learn this? So there are no extra costs involved. Once you pay for the course, that's it. We don't have anything for any extra indicators or anything like that. Everything is in the course. If you email Craig, he can arrange some sort of multi-payment situation if you don't want to pay for it all in one hit, or if you're not able to. And how much time do I have to spend to learn on this? You can answer that one, Eusebio.
Yeah, it depends of each one. The ideal would be to be able to dedicate 1 hour per day, and so some students succeed to learn and to apply the max after 2 or 3 months. Some other need 6 months, and some few need more than 6 months. For example, 1 year or even 2 years. So it depends on how much time you can dedicate and how much committed you will be in study the max. Just to give you my own experience with the max. The first time I take the course with Jim, it was in March 2008, and in July 2008, so 4 months later, I went live. So it took me 4 months to be sure, or rather sure, I was able to trade with the max. But I was focusing a lot on the max, and even almost full time. So it really depends on each one.
Yep. And also Eusebio came into this with a really good, into the max with something like 10 years of previous trading experience behind him. Not necessarily full time, but with involvement with the industry, having set up his own trading groups, etc. So everybody is different in how quickly they learn this. So, okay. Other questions? Will this work with gold and indexes, and does it work on daily charts? Eusebio?
Yes, it works on any other instruments we can trade, so gold, silver, other precious metals, but also on other commodities like crude oil, for example, corn, wheat, and so indexes. Of course, we have a lot of traders trading, for example, the DAX, the German DAX, or the YM, which is the futures contract for the Dow Jones Industrial Average. Some are also trading the ES, which is the future contract for the Standard & Poor's 500 and so on. Some are also trading, not with MetaTrader, but with NinjaTrader on the currency futures market, like the 6E, for example, for the Euro futures contract, and so on. So, indeed. Okay. And I know also some traders trading bonds, the 10-year, the 30-year, the 2 years bonds in US, in some European countries, for example. So any financial market with enough volumes, in fact, can be traded with the max.
Okay, and sort of following on from that, then somebody else has asked, which time frames should I use, and how can I trade while I am employed?
In fact, you can use any time frames. No time frame is better than all the others. In fact, with smaller time frames, we may be more profitable because we have many more opportunities to trade. But each trader must carefully choose his or her time frames depending on the time constraints. We may all have other activities, professional activities or family activities or social activities, and so the time frame or the time frames, because we can trade on several time frames, of course, must be chosen carefully in order the trading process fits ideally in your life. So, for example, myself, I like to trade with 2 different time frames, with independent trade on the 5-minute time frame and on the daily time frame.
Okay, thank you. And somebody else has asked, how do I find or work out the right trading strategy? Reading that incorrectly. Yeah, the right trading strategy for a good success rate. How do I know when to enter correctly, and how do I know when to exit correctly?
First of all, let me tell you that the winning rate has nothing to do with being successful in trading. I can show you trading system having 95 or 99% winning rate and failing miserably. This is especially the case with scalping system. Myself, sometimes my winning rate dropped to only 30%. Sometimes 100%. It's never the winning rate which is important, but the expectancy you have with your trading system. Is the average result of your trade positive? Then, of course, the frequency of the trade is also important for the financial result. And so, in order to have a good trading system, you need to have entry conditions and exit conditions allowing you to catch the good opportunities in the market with the reasons why the market are moving. And so this is what the MAX provides you. An entry for a trade, if you don't understand what the market is doing, for me it's not a good idea. And this is why I have added in my description of the MAX the third type of aspect we are considering, the global context. The global context is, let's say, to make it simple, the fundamental aspect which helps to understand why the market is moving. And so when we have the good opportunities, and this is what the MAX is doing.
Okay. Somebody asked, how do I manage Forex trading so I don't get stopped out too early and yet manage my risk of loss?
But again, if you understand how the market is moving, you will understand that depending on the type of movement and the market conditions, having a stop loss of, for example, 10 pips make no sense. And so we need to use a stop loss large enough to avoid being stopped out too early, to avoid, for example, some spikes created sometimes by the market when the big boys try to manipulate the market. This sometimes happens, but we may have also circumstances with a higher volatility. And so we have rules to define where to place the stop loss, and it's very rare for our stop loss to be hit. In fact, then once we have placed the stop loss on our chart, we define the trade size based on the risk we want to allocate to the trade and based also on that stop loss size using the position sizing concept.
Okay, thanks, Eusebio. And not many more questions have come through apart from ones to do with psychology. So one person has asked, well, actually a few people have kind of asked / said, most of, for instance, this person, I'm trying to trade short time frames and earn 20 pips by day. Most of the positions are positive, but when one or two fail, I become nervous. I need to earn my living so much, and I would like to be certain of the market and not be afraid of it. How can I stop that?
What I'm going to say may perhaps surprise most of you. I don't believe in psychological mentorship. For me, problems or fears in trading comes from several uncertainties we may have or some knowledge we are lacking. Indeed, what happens when we open a trade? When we open a trade, we never know in advance what the final issue of the trade will be. We can never be sure if the trade will be a winning one or a losing one. And so we are facing uncertainty. If you know your trading system perfectly, you will have some certainties. For example, you will know what is your expectancy, your winning rate, your losing rate, and so on a large sample of trades, for example, 100 or 200 trades. This is the first point. So if you know what you can expect, this helps greatly. The second point, why you may have fear in trading, it's mainly the fear to lose money. This comes based also on my own experience. When you are over-leveraged on the trade, you are using a too large risk for your trade. Maybe for many traders, even a 2% risk may be too high. And so my advice is always to use a smaller risk. Myself, I rarely use a risk per trade more than 1%. And when you use the appropriate risk per trade, depending on your own risk averse, believe me, more than 90% of your psychological problem disappear. The 10%, the 10 remaining percent comes from practice. Once you practice, you will get also confidence in yourself. The aim is to never be in a position to get ruined with your trading account, and to get in a position when you will feel comfortable enough with each trade you will take. And by the way, aside our courses, we have also mini courses, and in one of these mini courses, I teach a special approach allowing to each trader to define his or her own level of risk to adopt in order to reduce greatly all the psychological problem, while being able to sustain a very long period of unfavorable market conditions.
Okay, couple more questions, and then that'll be about it, I think. The next one is one we don't really answer, is what brokers can we recommend?
We never recommend a broker because it depends on the countries, it depends on your own objective, but always take reputed, recognized brokers affiliated with their regulatory authorities, and so having good guarantees, and so. But we never recognize a broker. We have no business link with any broker.
We can tell you who we use, and we'll do that in the course itself. And sometimes in the scrolling parties we have chats about brokers, who's good around the place, who people like, etc. But yeah, there have been brokers out there that we thought were really good, and then they've been caught with their fingers in the till, so been caught stealing money from people. So we really don't want to recommend anybody.
Yeah.
Don't want to be associated with.
Just a small tips about that problem. Avoid most of the broker giving you a 500 to 1 or more leverage. This is never a good point for brokers offering a too large leverage.
Actually, because it's part of the session that I'm doing tomorrow with Standard, a lot of people seem to think that the higher the leverage, the more profit they'll make from a trade, and it's not that way. In the States, the leverage has dropped down to 50 to 1 when it used to be 400 or 600 or 800 to 1. Essentially, that just means that if you have $1 in your account, you're allowed to trade up to $50 with that particular $1. It doesn't mean that if that bet that you've placed makes 10 pips, that you're going to make more pips on a higher leverage than you will on a 50 to 1 leverage. It's still the same number of pips. But it also means that if you have a high leverage, like 400 to 1, and you place your trade, then your account can come back down to almost very near zero before you get stopped out. It means that the broker will take all your money away from you if you don't have a winning trade. Whereas with a 50 to 1 leverage, you'll still have money in your account left over if you do get stopped out, if it was a bad trade, that you can carry on trading with. So that's why they like having the high leverage. It's a way of another way of taking your money from you. Air quotes, bunny ears, legally, for instance. Okay, couple more. Sorry, you say
consider the leverage the brokers is offering to you as the rope he offers you to hang up yourself. Never forget one important thing. While your drawdown increases linearly, your profits to recover increases exponentially. And so if you focus only on the profit, you will be tempted to be over leveraged. On the contrary, focus on the risk, never on the profit. If you focus on the risk, the profit will follow.
Yep. And I know that a lot of people think, oh, okay, but when I first heard that sort of stuff with reading a lot of books, people saying, focus on risk first and then the profits will come, I didn't really understand what they meant for about 5 years. And it's only, at that point, it sort of dawned on me that it's, if we put it as an analogy of, do this a lot, driving a car. If you make sure that you stay on the road and that you don't drive off the road, and that you keep the wheels air pumped up and petrol in your tank and make everything safe, then you're likely to get to your destination. You can still have an accident, but you're most likely to. But if you just try and get to your destination as fast as possible by putting your foot down and don't worry about the risk involved, then you're more likely to run off the road. So it's that kind of thing. So be safe and you'll get there. But if you're really careless with what you're doing and you don't even know what the risks are, and there are a lot of risks with the trading, then it's unlikely that you're going to get to the goals that you want. Okay, one last question. My question is, what's the key to becoming consistent? I tried Bollinger Bands, moving averages, support and resistance, and it's all quite BS in my opinion. It's a ratio of 50%, so this makes it gambling. How can I become consistent? Eusebio.
That's a very good question. That's a very good question. If you remember what I have explained earlier, technical analysis, personally, I consider it matters for only 10% in trading system. Only 10%. It just helps you to get faster to potential opportunities or to potential risk in a trade. Understanding the global context is much more important. When you understand what the bias is in a specific currency or in a specific pair, then the technical tools will help you to time your entry. But you have to get it in the appropriate order. First of all, have a good idea in which direction you have to trade, and then you can use tool in order to get to fine-tune your entries. Many years ago, I remember in the 90s, I have had with a friend, we have made a very detailed analysis of technical analysis, and in order to get consistently successful or profitably, to be profitable with only technical analysis, it was important to get a winning rate larger than 72%. With a reward to risk ratio larger than 1-to-1. And this is not so easy to achieve on the long term. And so the process
Eusebio, sorry. Why do you need such a high win rate when each win is profitable?
This is due to the fact that winning trades and losing trades comes by clusters. And when you are trapped in a losing streaks, your drawdown goes deeper, and you will need more profit to recover. And so this is simply the reason. And you have also the cost of making the trade, which is the spread, which increase the losses, and so which has an impact on your winning and losing rate. And so all that combined requires to have a very high winning rate in order to be successful only with technical analysis, which is not so easy. And so that's it. What we do with the match, we explain an entire process containing all the elements we have mentioned: technical analysis, risk analysis, global context analysis. And when you apply that, the consistency must be obtained in applying the trading process and not necessarily in trying to achieve systematic profits. You never know how much profit you will get every day or every week. It may be highly variable from one week to another, but if you get consistency in applying the process without never deviating from it, the profit will follow.
Okay, thank you, Eusebio. I think we're about to run out of questions here, and unless somebody pops something up very quickly. So I'll just remind you, the links for the courses, if you're going to take them, are up there on the screen and also being put into the chat area. And for about 5 minutes after the session finishes, we'll leave the page running, if that's okay, Eusebio.
Yeah, no problem.
Okay, so I'm going to wrap things up now. Thank you very much for your time, to the Maxes and to you new people, and for those watching this by video. There's about 500 or 600 people that are sitting in on this course as well. And if you have any questions that you want answered, please feel free to email us about them as well. Got no problems with that. And yeah, hope to see you in a class very shortly. Thanks, everybody. Bye.
Yeah, bye everyone. Have a great rest of the weekend. And for those of you who live in Europe, don't forget that this night we go daily saving time. So don't forget to go to sleep 1 hour earlier. Bye everyone. Thank you very much.
And just a quick reminder, don't forget that we have another live trading session coming up on Thursday, March the 30th, and we'll kick that off at 8 o'clock in the morning Thursday. So if you're available, we'd love to have you in the room for that. Thanks, everybody. Bye-bye.